in conversation with Siddharth Zarabi, Managing Editor, Business Today Television. I'd like to announce our next set of guests. And it gives me great pleasure to welcome some of the biggest names in stock markets when it comes to the Indian markets. Nilesh Shah, MD and CEO, Kotak Mahindra AMC. Vijay Chandok, MD and CEO, ICICI Securities. Basant Maheshwari, investor and author, The Thoughtful Investor. And Dheeraj Relly, MD and CEO, HDFC Securities. A power-packed panel. And these are eminent speakers whom we often go to for insight and guidance and anything that will help us understand better how to strategize in equity markets. So this promises to be a fantastic conversation. Siddharth, over to you.
That's how it is. Good afternoon. A very warm welcome to this fantastic panel. I am personally very happy to be moderating this stellar panel. Nilesh Shah, MD and CEO of Kotak Mahindra AMC. Vijay Chandok, MD and CEO of ICICI Securities. Dheeraj Relly, MD and CEO of HDFC Securities. And Basant Maheshwari, a thoughtful investor who invests and writes. Glad to have you on the stage here. The big question that I want to start today's afternoon with is, how does one become Rakesh Jhunjhunwala? How does one become Warren Buffett? Because this is a question that a lot of the new age entrants, the retail investor, asks, and the topic of our session is the coming of age of the retail investor in India. Almost 106 million demat accounts, 15-year high participation as far as retail investors are concerned in stocks. So how does one become Rakesh Jhunjhunwala or Warren Buffett? Nilesh, I'm starting with you.
सिद्धार्थ भाई, अगर मुझे मालूम होता तो मैं बन जाता ना, आपको थोड़ी बताता.
That's a good one. The same question, Vijay, to you, and then I go across the panel on the same topic.
Okay, that's a serious question.
Yes, that's a serious one.
So I wish I knew. But, you know, from whatever I've heard and observed, I think people like him and other very successful investors have got some traits which kind of cut across. I think one of them is their ability to take risk, identify trends ahead of others, stick to their conviction, have patience. At least some of these traits they have displayed, but I still don't think that really makes up the man.
Okay.
There's so much more than that.
So much more than that. Dheeraj, the same question to you.
I'll add to what Vijay said. I think
If you could keep the mic closer. Yeah.
other than what Vijay said, I think the passion and having a heart and soul for the investment and wealth creation is something a start point. I think after that you have to build it over a period of time by acquiring knowledge on a regular intervals and making learning as part of the sense of the investing. I think that's something will add to, while you know it's very difficult to emulate Rakesh Jhunjhunwala or Warren Buffett, but you can get closer to that with these traits.
Basanji, just to follow up on Dheeraj, for those two people, even if we get 0.1% closer to them, most of us in the hall, we will consider ourselves through. Go ahead.
Yeah. So I think Rakesh Jhunjhunwala, if you want to be one, no financial planner will ever advise you to do what you should do to become Rakesh Jhunjhunwala. First is you have to have intelligence, passion, excessive risk-taking ability, and huge leverage. So the moment you think of leverage, people will say, "Arey, pagal hai, mar jayega." So that's how you start. Warren Buffett is more of an, I think, entrepreneur than an investor. He manages people, he manages money rather. So that is possible. And plus for Rakesh Jhunjhunwala, you need the roll of dice to fall in your favor. That's more important.
Nilesh, I'm coming to you because many of the questions that we routinely get asked, and you are also routinely asked, is about comparing 2022 versus 2023 from an outlook perspective as far as the retail investor is concerned. This story is very well known, how millions of Indians have taken to investing, but as 2022 taught them, there is a downside also. So to address that big sort of fear in the room, how does a retail investor in the Indian markets protect the downside that is likely?
So the only way to protect downside is through asset allocation. You follow your asset allocation strategy, take risk what you can manage, buy when things are cheaper and sell when things are expensive. सिद्धार्थ भाई ये सब बोलने में बहुत इजी है, करने में जान निकल जाता है. And maybe I'll take a minute to put the lighter side and then leave it to others for serious side. There is this couplet in Mahabharata where Krishna Bhagwan goes to Duryodhan before the beginning of the epic battle and says that why are you fighting? They are your brothers, give 5 villages. And Duryodhan doesn't agree. Krishna is Bhagwan and yet he can't convince Duryodhan. Duryodhan replies to Krishna after a lot of persuasion, Janami dharmam nachme pravrutti, Janami adharmam nachme nivrutti. Oh Lord Krishna, please don't tell me what is dharma, what is right. I know everything, but I can't follow it. And don't teach me what is wrong, what is adharma. I know it fully well, but I can't desist from it. So हम सब में एक दुर्योधन आज भी छिपा है. वो कहता है कोला मत पियो, जंक फूड मत खाओ, बट हम लोग उसको फॉलो नहीं करते. Same thing is in finance. Everyone knows the 3 mantra of regular investment, long-term investment, discipline, asset allocation. But वो दुर्योधन पे काबू कैसे लाए? So जब तक दुर्योधन पे काबू नहीं आएगा, तब तक आपकी wealth journey ऐसे ही रहेगी.
That's a good one, Nileshji, because I think for the next time this is a lesson to us. We should perhaps also do a session with spiritual gurus to avoid the Duryodhan when it comes to investment. Vijay, how does one avoid Duryodhan? Because the point that Basant also made and all of you have said, intelligence and passion, if I were to take up only those things, intelligence is something that you are perhaps born with, passion is something that you can develop. And if one lacks these, is he ruled out of the markets?
So, actually, if you see the current context and look at the bunch of investors who are coming, so first and foremost, I must tell you, they are very, very smart guys. They're young, very smart guys, and they're coming from not just the top cities, but Bharat. Second, they are pretty well read. I think what is unique about these youngsters coming to the market is, I think technology, digital stuff that's been happening over the last few years has given them access. They are, I don't think, there's something called cosmopolitan. If there's a cosmopolitan, world cosmopolitans, I think these guys may be coming from a small town, but they would know what's happening globally. Very well connected through various social channels. So they are not necessarily they have access to data, information, research, content, processed outcomes. So, I mean, if you don't have the intelligence to do it yourself, there is someone who's really able to do that. So that access and availability is there. And when we've seen this behavior this time of investors, I would observe that, yes, there is pain, but there's no panic. And I think one of the reasons why I would say that there is pain but no panic is because I think leverage, and I think Basant mentioned that earlier, leverage in the market relatively, at least in the retail side, is very, very low. And when there is low leverage, there is a relative panic doesn't creep in. So in the sense, I would just add that information is available, research is available, not very difficult for them to access. Even if you don't have that intelligence, you can access it. It's pretty, lots of tools have come. That's another way of dealing with.
That's a very good point, the role of technology, because 20 years back, I don't know how many people would recall here the process of opening a demat account. And now look at the process of onboarding on a demat account. Look at the kind of velocity of transactions that you can do using your smartphone. A lot of people of the newer generation that you spoke about do that. Dheeraj, I want to come to you and pick up the point about the difference in the retail investor this time around, because the market, one of the truisms is that the market is full of cycles, and we see cyclical investors also. Of the active users on NSE, we have seen a slight drop in October, but it's the fifth consecutive month drop from June. It's the last data that we have is only 36 million. Is that indicative of retail investor interest peaking because of the ongoing volatility, or is it something else?
I don't think so. It's peaking yet because the retail investors are signing up more and more demat accounts. So we are seeing good inflow of new customer sign up across the industry. So I don't think so. It has peaked up. I think in last 5-6 months we've seen less active monthly users as compared to 1.17 crore what we had in as peak customers, and now it's somewhere close to 89 lakh customers in the December or November 2022. So it's just about little bit correction in terms of monthly active users, but we are seeing good and more interest into the markets. What Nilesh mentioned, that when other asset classes like debt or gold become attractive, some bit of shift happens to these kind of asset classes also. And also when there is more volatility, some of the investors take their own time to participate in the market and they get a little bit more calibrated. But having said that, the financialization of savings as a trend is just on the cusp of even further exponential growth.
What sort of ideal equity allocation or a basket would you propose at this time? Debt versus equity versus other assets?
So that this is a very generic question, and there's no one size fit all answer to this question. This depends on the age, risk appetite, and understanding of various financial instruments. So one has to really do this for an individual investor and not a ballpark number. But the most important thing, what Nilesh has also highlighted, that we should not undermine the importance of asset allocation and stick to that asset allocation discipline. So in any investment process, there are 3 steps. One is decision, second is execution, third is tracking. So one has to not only decide which asset classes are suitable at the time of the investment, then of course execute the same, and then on a continual interval one has to track that how the portfolio is performing, whether their asset allocation is right and is aligned to the market conditions or not. So it's a process. There's no one size all fit solution that is available that I can recommend.
That's a wonderful answer. Yeah, Nilesh, please.
सी आपने ट्रेडर के लिए, ट्रेडिंग के लिए, इन्वेस्टर के लिए पूछा था कि इन्वेस्टर साइक्लिकल होता है क्या? बट इन्वेस्टर इज नेवर साइक्लिकल. इन्वेस्टर इज लॉन्ग टर्म. एक बार चालू किया जिंदगी भर करता रहेगा. ट्रेडिंग इज सीजनल. वो आता है, पैसा खोता है, फिर निकल जाता है, फिर उसका रिलेटिव आता है, वो भी पैसा खोता है, वो भी निकल जाता है. सो ट्रेडिंग इज सीजनल. इन्वेस्टमेंट इज लॉन्ग टर्म. ट्रेडिंग इज लाइक फ्लर्टिंग. इन्वेस्टमेंट इज लाइक शादी. 7 जन्म तक आप इन्वेस्टिंग ही करते रहेंगे.
That's a good one. Can I do a quick follow-up before I go to Bazar? Nilesh, to you itself. The sort of broader question, therefore, should one invest looking at price, or should you invest in a company and ignore price?
So there is a philosophy, buy at any price. It is called BAP. Then there is a philosophy which is growth at reasonable price. That is CARP. Then there is a philosophy which is growth philosophy. Then there is philosophy called value. So there are many things. There is no one way to nirvana. You have to do what you think is appropriate.
आप अपने भगवान को पूजिए जैसे भी पूजना चाहते हैं.
Precisely. But investing करना, trading मत करना. Trading is a very, very hard way to make money. India's
and an easy way to lose money.
Oh, for 99% of the people, it is a way to lose money. And on trading, I'll say just one thing. India's best known trader is Radhakishan Damani ji. वो फ्लेम इंस्टीट्यूट पूना में थे, तो किसी ने पूछा कि सर मैं आपके जैसा ट्रेडर बनना चाहता हूँ, कैसे बनूं? तो उन्होंने बड़े प्यार से कहा कि देख बेटा, मैंने अपने बच्चों के लिए ना डीमार्ट खोला है, उनको भी ट्रेडिंग नहीं करा रहा हूँ, अब तू रहने देना भैया.
Basanji, I'm coming to you, and the question is more to sort of get your view on what happened in 2022. We saw post-COVID a wave of people coming in, घर पे बैठे थे, extra time था, work from home था, and for many people there was no work either in office or home. They were laid off, and we saw this surge. And they entered new age companies. The panel has told us that technology, the ability to buy at a button, greater information. There are, several dozen registered entities and several thousand unregistered Telegram, WhatsApp channels who keep offering you all manner of tips and guidance. But a lot of retail investors have burnt their hands very badly. New age IPOs is one example. Have they learnt lessons, or is 2023 likely to continue to teach these new age investors harsh lessons of investing?
I think losing money in the first couple of years of your entering market is normal. It's like breathing in and breathing out. We all lose money, then only we learn. If you don't lose money, you will not learn. But what has happened in 2022, 2021, 2020, courtesy WhatsApp, Twitter, Telegram, and all those quick communication channels is the cycles have become compressed. So everyone wants to get out of the same door. Everyone wants to come in through the same door. आप मीडिया में आपको जो पता चलेगा मैक्सिमम 5-7 मिनट के लैग के बाद मुझे भी पता चल जाएगा. आज से 20 साल पहले जो आपको पता चलता था मेरे को पता चलते चलते तो बेयर मार्केट बॉटम होके ऊपर होने लग जाता था. So the compression of the cycle first, and secondly, on the previous thing, I think these newcomers have got a lot of intelligence. They want to read, they want to understand. What they really lack is experience. And that is why when they hear of recession and Amazon putting 18,000 people off the job, वो पहले आके शेयर बेचते हैं कि अब तो रिसेशन आ गया, खत्म हो गया. फिर उनको लगता है नहीं फेड शायद उतना काटेगा नहीं, फिर वो खरीदते हैं because they don't have experience. So what they read, what they hear, that is what they perform. And stock market, I think, is as much experience, as much psychology understanding as it is about intelligence. So the negative part for this new age group from our perspective, from a general markets perspective, is they have compressed the cycles, and secondly the volatility has increased through the roof because हर 2 मिनट पे बेचना है, हर 2 मिनट पे लेना है.
So is the risk appetite different for this current crop of investors?
No, they have no risk. वो 2 लाख की सैलरी में से 20-25 हजार रुपए डालते हैं और पुट खरीद के चले जाते हैं, घर वापस आ जाते हैं. रिस्क तो हम लोग के लिए बनाते हैं वो जो हमारी सारी संपत्ति लगी है स्क्रीन पे. वो तो 20,000 का पुट लेते हैं और वो पुट बिक गया, कर गया, हो गया. They are playing play with lotto basically, most of them, and which is good for brokerage companies actually.
बारात में खुश होके जो ज्यादा फायरिंग करता है, that is the kind of risk that you're talking about.
I just want to make one additional comment. Lots of tools have come. And these tools enable you to enter into a trade with locked-in appetite of risk. So you know that's the max you can lose is X amount. You lock that amount in and you hit the trade. Tech and analytics, combination research, all that has made it possible to make these things. So I mean to say that these guys have lost their shirt, maybe a little taking it too far. I think there's pain, but there's no panic.
Okay, there's pain, there is no panic. And since we sort of agree as a panel on that, Nilesh, I'm coming to you. And we started this conversation, it's the same question really in a different way. Therefore, how does a retail investor in the Indian markets in 2023 try to generate alpha?
Okay. So alpha is relative to the benchmark index. Your benchmark index could be much higher versus mine versus which is. So please first find what is your risk appetite. If you didn't buy during March 20 correction, that means you are not an aggressive investor, you are conservative investor. So, आज बोलना बहुत इजी है कि मैं तो एग्रेसिव इन्वेस्टर हूँ. भैया मार्च 20 में जब अपॉर्चुनिटी तब आपने नहीं खरीदा तो यू आर नॉट एग्रेसिव.
तब मगर डीमैट अकाउंट भी नहीं था मेरे पास, मैंने सोचा नहीं था, बाद में पता लगा भेड़ चाल हो गई.
सर अब पेनल्टी गोल मिलता है तो वहीं पे फायर करना पड़ता है. आप ये बोलो मेरी स्टिक अच्छी नहीं है, बॉल ठीक नहीं था, वो गोलकीपर रेडी नहीं था, बस वो तो अपॉर्चुनिटी गई. सो वन, प्लीज बी ऑनेस्ट टू योरसेल्फ. Are you conservative investor, aggressive investor, average investor, whatever it is? Second, what is your investment objective? Everyone wants to make money, but making money is like birbal ke khichdi. उसमें time लगता है पकने को. As Warren Buffett mentioned, so someone asked Warren Buffett कि भैया आपके लिए तो इतनी सारी किताबें लिख दी है लोगों ने, तो is there any secret left out? तो he said no, there is no secret left out. मैं जो करता हूँ सबको मालूम है. So then how come other people have not become like Warren Buffett? So he says, my style of making money is very, very slow. People don't have patience. So Be clear why you are investing. Making money is not the reason you are investing. You have some objective. And then based on your risk appetite and objective, try to build a portfolio. Some fixed income, some equity, some real estate, some gold, some offshore assets. That portfolio should give you real return. Compound karte raho, eventually you will make money. Now in 2023, for equity market, it is more like buy on dips market. If you look at from a fair value point of view, with the caveat that market does not necessarily always trade at fair value. In bullish sentiment, it will be above fair value. In bearish sentiment, it will be below fair value. But from a fair value point of view, the entry level of Nifty in 2023 and exit level of Nifty in 2023 should be similar. We expect Nifty EPS to be about 1,000 rupee anywhere in calendar year 24, but more towards December 24 than Jan 24. So 18 times 1 year forward, 18,000 Nifty looks like a reasonable fair value number. So if markets are going to enter and exit at almost similar level, you have to make money either by picking up right stocks or by buying on the correction. But be clear about your risk appetite, have your investment goals defined, and follow a disciplined asset allocation. ये 3 कर दिया तो 2023 में आपकी नैया किनारे उतरेगी.
2023 में नैया किनारे उतरेगी. Vijay, the role of discipline, and these are like fundamental questions because the approach is what really matters. That is what all of you are saying. What is the key ingredient when it comes to investment discipline according to you?
Yeah, I think impatience plays a very big role there. The impatience that people have takes them away from discipline. The desire to make a quick return, a quick buck is so deeply ingrained in human behavior that the moment you see any kind of an adverse movement to your starting theses, you start becoming nervous and come out. Now let me just give you a small instance of what happened in the current year. We all talk about mutual funds, SIPs doing extremely well. But if you were to double click into this, a few quarters back, SIP was in the ballpark of about 10,000 crores a month. Today it's about 13,000 crores a month. And when you double click and look at the number of folios that were actually contributing to a 10,000 crore monthly run rate versus a 13,000 current monthly run rate, you will find a very interesting insight there. The number of folios have actually come down in relative numbers. What it seems to suggest is that the smaller retail investor has sort of got a little worried about tepid performance or an adverse performance or a market correction, and he's just stopped investing. The more seasoned, heavy duty investor has actually increased allocation. So this clearly points out to the fact that discipline, I mean the systematic investment discipline, if it doesn't match with your theses, there is nervousness. So I think, the point that was highlighted by Nilesh, that you've got to first understand your objective, understand your risk appetite, commit yourself to that risk appetite, commit yourself to your objective, and then stay completely resolute to the process rather than getting very nervous with every reaction that happens in the market. You have to understand market will show its colors of ups and downs, and you've got to take it in your stride.
Absolutely. Taking it in the stride is very important. Dheeraj, whenever the economy is a bit tricky, investors take a mode of, it's either flight or fight kind of mode. The economy is a bit tricky, more so globally than in India. The message for the Indian economy is far more robust, and if you take a medium to long term view, even better. Does a tricky economy, in your view, make for a good time to invest?
If this question is in the context of the context of retail investors, my answer to that is that retail investors do not pay so much cognizance to the macro environment. They are more focused on the bottom-up opportunities. And that's where they are spending more time, particularly Gen Z, millennials. They are spending more time in spotting the opportunities. And Basant mentioned that the information arbitrage that was there with the institutional investors is no more their privilege. And now through the social media, the access of information is available in fraction of minutes to all investors. That's where they are looking forward to the bottom-up opportunities. So they are not paying so much cognizance to the macro environment. More so, if at all there is discussion, it's all discussion in the more dinner get-togethers and more intellectuals conversations and nothing more than that. We are seeing that there is enhanced interest of the retail investor in the markets, and that get reflected through the number of folios, number of investors that are participating in the markets. Vijay just mentioned about the number of folios. Let me add that few data point to that. Today we have in the mutual fund industry almost 14.8 crore folios. This number used to be somewhere close to 10 crore a year and a half ago. So it's moved to almost 40%. What we have seen in the kind of accumulated number in the last 25, 30 years. So that's the kind of pace we are seeing. And with the growing awareness, I think the people are increasing their ticket sizes in the investment also. So retail investors per se have demonstrated more resilience than I think even the more institutional investors.
Okay, Basant, on the same point with a slightly sort of added question, does it also mean that domestic institutions have now sort of finally come of age vis-a-vis foreign institutions in being participants and in a way holding up the markets?
Yeah, absolutely. Because 2008, I think the foreigners sold about 70,000 crores and the market fell 60%. And this time we've just held it on. But I have a different view on this. I think domestic institutions, and Nilesh Bhai is at the forefront of it, ये बाजार बचाते हैं, ये बाजार बनाते नहीं है, ये सर्किट मार के नहीं लेते हैं. सर्किट मार के FII लेता है, 5% ऊपर 10% ऊपर ले लो. So domestic institutions give you a very cushion, a shock absorber effect, and that is because it's the retail guy who puts in money on behalf of so many of them. But I think on a longer context, 1 saal, 2 saal, 3 saal, moment people figure out that gold is only a dollar asset. Basically, if dollar goes up 3.5% every year against the rupee, that's what you're going to make in gold over the very long period of time. Because इतना inflation आ गया, सोना का दाम तो उस हिसाब से कुछ बढ़ा ही नहीं actually if you look at it. So I think the shift will come, and they will come, and the domestic institutions are there for us. But I think the domestic guys saved us this time compared to 2008, 2009. At that time, I mean, the markets were falling 9 pins and nobody knew what's happening. But this time the support is there. And now think of it that once the Fed starts cutting rates, now we can debate whether it's 6 months, 1 year, 2 years. And once the FIIs come to buy stocks, share कहाँ है यहाँ पे?
शेयर का नीलेश जी, आत्मनिर्भर मार्केट्स, भारत आत्मनिर्भर है, आत्मनिर्भर मैन्युफैक्चरिंग कर रहे हैं, इसलिए मार्केट्स भी आत्मनिर्भर हो गए इंडिया के.
So one, it's not that we are against foreign portfolio investors. If share price goes up, they'll make money, we will make money. So the bread is buttered for us on the same side. We are not on opposite side. Second, as Basant Bhai mentioned, we also invest to make money. Now in March 20, FPIs were coming and telling the broker 10 lakh Reliance बेचना है. They were not putting price limit. वो broker हमें phone करता था, सर 2 लाख Reliance बेचना है, लेना है. हमें भी उसकी बातों पे से लगता था कि नहीं बॉस ये तो टेंटेटिव है. तो बोला 50,000 ले सकते हैं, बट थोड़ा नीचे मिलेगा तो देखेंगे. Now we were able to play a kabaddi match with foreign portfolio investors, and because they had not put price limit, we could bring markets down and continue to buy. जब उनकी selling अटक गई, market bounced back. But come October 21, those guys had also become smarter. Now they were saying 10 lakh Reliance बेचना है, but at this price. So it's a game of kabaddi. Sometimes they win, sometimes we win, but both of us are playing on the same side.
बट कबड्डी खेल तो इंडिया का है ना.
हाँ, so hopefully हम उनकी टांग खींचने में थोड़े ज्यादा माहिर होंगे because they don't know this game as well. But there is a big fundamental change happening in market, and this is kudos to mutual fund distributors who have highlighted this buying on correction, SIP kind of values to investors. Earlier, whenever there was correction, we used to do conference call and go out to meet investors and say that there is correction, don't worry. Now when there is correction, they call us saying, Nilesh bhai, डरना मत, हम लोग पैसे भेज रहे, खरीदते रहना. So game itna change ho gaya hai. And you look at the behavior from March 20, in a rising market, it is SIP of 10, 12, 13,000 crore minus redemptions. So I have to invest only 1,000, 2,000, 3,000 crore in a rising market. In a falling market, it is SIP plus subscription. So 13,000 crore plus 10,000 crore, 23,000 crore. This is the first time in life when I'm getting money when I want to buy, and I'm getting less money when I'm not that much interested in buying. This is all thanks to mutual fund distributors who have popularized this concept of SIP, regular investment, buy on correction, SIP top up. And as long as this maturity with investors and distributors is there, I think we will continue to play a role of shock absorber in FPI.
A round of applause for the distributors, because, you know, they are hardly celebrated. They are the real backbone of the industry. Vijay, you wanted to come in on this point? Dheeraj, both. Yes, absolutely. That's fine.
I just wanted to add, you know, to respond to both the observations. Shock absorber currently, yes, but just imagine. I don't think too many people imagined that this would have been possible. You know, when FIIs are selling, markets are holding, as a concept probably has happened for the first time in our living experience. If the momentum continues the way it is continuing, and there are no reasons to say it should not, and the structural undertone is pretty strong, I think it's a matter of time where even the domestics will probably start punching in a way that, you know, they start creating the circuits. Basant said that is not yet seen. Like he said, they need the money at the point in time when the markets are up. I think that scenario will evolve. It's a matter of time before it happens.
Just one quick point, Dheeraj, before you come in on this. Vijay, how much of this would you attribute to greater trust that your industry has managed to create? Because I'm looking back when I started, you used to see headlines around a scam. I broke one scam story, and one doesn't get to do that at all. The markets have improved, technology, Aadhaar, everything is practically at a touch of a button. KYC is wonderful, video KYC. Many countries, advanced economies can't even dream of doing all of that. How much of trust is also responsible for this?
No, pretty much. I think this is a game of trust. As long as people believe that, you know, their hard-earned money is that is getting put to work is in safe sort of zone, they will continue to put money. And I think the regulatory sort of mechanism that has continuously kept evolving over the years is to be complimented for, you know, achieving this kind of an outcome. Systematically, we've seen, you know, number of regulations coming under two themes. One is, what are the bunch of things that we can do to prevent mis-selling? I think all the incenting to mis-selling has been systematically eliminated. And the whole set of regulations has that have come have ensured that mis-selling is, you know, tending to zero, literally. And second is, what can I do to reduce systemic risk? You know, so a bunch of regulations which have come, which have ensured that the money in motion, so to speak, and the securities in motion are moving through safe quarters. And, you know, you don't suddenly figure out that while the money is in motion, suddenly disappears in between, or securities in motion disappears in between, particularly in a digital world. And plus, I think a bunch of regulations on the funds itself, you know, what kind of discipline is to be instilled. It's on the one side, it may sound pretty onerous for the fund, but I think it is ensured that the trust factor, which is the core fabric of continuous supply, keeps getting built.
The same question to Dheeraj, and maybe if you could also dwell for the benefit of our viewers and audience here on the role of taxation also to keep the sector alive and kicking.
Before I talk about taxation, let me just add few more enablers to what Vijay mentioned and you mentioned, the trust. I think other than the trust, there are enablers like efficiency. And just to substantiate my point, tomorrow onwards, I think 27th onwards, we will be moving to T+1 settlement. Other than the China, we will be the second large country in the world to move to T+1 settlement, which will make markets more and more efficient also. So trust, efficiency, and also ease of doing business. I think these are big enablers that has added more confidence for the investors and participation of the investors. I think we need risk capital for sure as in India to grow to next level. For that, we need to incentivize the taxation on equities for sure. I am strongly in favor of having a better taxation for equities and particularly long-term capital gains, because we pay STT already at the time of executing the transaction. It's a double taxation. It makes no sense to have a long-term capital gain tax on this thing. And it wasn't there. It was introduced very recently again. So that's something I think in the business today, Vijay has covered very nicely on taxation. I would recommend everyone to read that article, and I completely endorse the recommendations made by Vijay. So I think there is a need for us to relook at the taxation and make equity as more attractive investable option, and particularly make it at par with the insurance and other instruments also.
Basanji, I'll come to you because in the remaining 10 minutes I want to take one broad theme. But Nilesh, on the issue of tax policy, just a couple of months back, one of the senior most finance ministry officials told us, and we reported that as well, that the thinking in the government is that there shouldn't be any arbitrage. And then there was detail into how there is differential tax treatment. There is the likelihood of a sort of policy approach being announced rather than a step being announced in the budget in a few days from now. Regardless of what is done, what do you personally see should be done in the medium term?
So we believe there should be level playing field. A person should not be taking an investment decision based on the tax concession offered. Let the choice be on a zero arbitrage level playing field. But on capital gain tax, I want to recommend Finance Minister to plug the loopholes. I am a retired chartered accountant because I have never practiced in my life. But despite that, I can think of 4 or 5 things in which tax is being lost. So the first one is people convert interest income into capital gain through listed zero coupon debentures. This is 1 lakh crore market at 10% interest conversion and 25% tax arbitrage. That's 2,500 crore for given. All you need to pass is a regulation that debenture is debenture and whatever they pay should be treated as interest, and you can't convert that into capital gain. The second thing is ULIP arbitrage. When you switch in my debt scheme to equity scheme back to another equity scheme or debt scheme, you pay tax at every level. In ULIP, you don't pay tax till maturity. It's a 6 lakh crore industry. Assuming 30% switches, 1,80,000 crore. Assuming 10% income on that, 18,000 crore. Assuming 20% taxation rate, 3,600 crore. The third thing is related to different maturities. In equity, 1 year becomes long-term capital gain. Now, how can you say long-term is 1 year in equity? We talk about 5 year and 7 year. Real estate is 2 year. Debenture is 3 year. Mutual fund is 3 year. Can we have just one standard definition of long-term? If you do that, what is considered short-term capital gain, what is today long-term will become short-term and you will get higher taxes. Then there is STT. We are probably the only country which doesn't differentiate between trading and investing. We have same STT for delivery versus in FNO. Now we must remember that there is no future in future and option for most of the ordinary traders. So why can't we increase STT on FNO so that there is some amount of deterrence, and let there be lesser STT on cash delivery? Finally, there is a cottage industry called SME exchange. वहाँ पे आपका पूरा capital gain का tax planning होता है. You can know what will be the price of SME stocks after 1 year. Now, these are all the loopholes which needs to be plugged. And this is coming from a person who hasn't practiced accountancy in his life. Now, imagine all the other chartered accountants, how many loopholes they'll be able to plug.
Perhaps
I can guarantee that they'll raise more capital gain by listening to them then increasing the rate.
Well, there's clearly a nice suggestion from you and maybe a separate chapter in the finance bill on capital markets taxation. The indication seems to be that some sort of policy approach will come through. But as we are in the last 5-6 minutes of the conversation, Basanji, I'm coming to you. The search for stock ideas. I'm sure whenever you are in an airport or a hotel or even maybe somewhere else, you are asked, "Sab ek idea de dijiye." I don't want ideas, but for the newbie investor who has so much more information available than was 10, 20, 30 years back, what does the search for stock ideas involve?
I mean, for a new guy who's starting, he should not try and find the next Bajaj Finance, the next Ultratech, and the next Infosys, because वो next होता नहीं है. That's another वो cliche है. But more often than not, he can figure it out, but वो exit नहीं मिलेगा. वो सब अभिमन्यु बन जाते हैं उधर. So even I can say it's not a recommendation, it's just for illustration purposes. आप 4 stock ले लीजिए. One is Kotak Bank. Nilesh ji wouldn't recommend on that. आप अल्ट्राटेक ले लीजिए, आप बजाज फाइनेंस ले लीजिए, आप डीमार्ट मत लीजिए क्योंकि पी बहुत ही एस्ट्रोनॉमिकली ज्यादा है. ये 3 स्टॉक आप सारी दुनिया का सारे अपना पैसा डाल के सो जाइए और सोचिए कि अब आप किसी को बोलेंगे तो ही वुड से अगर अल्ट्राटेक बंद हो गया तो, अगर बजाज फाइनेंस बंद हो गया तो आपके घर के आगे आप निकल नहीं पाओगे, पुलिस लगी रहेगी. So these are such companies which you can buy and hold and still make 14, 15, 16% CAGR. You don't need any mutual fund, you don't need any PMS, you don't need any investor, you don't need any Rakesh Jhunjhunwala, but you will not become a Rakesh Jhunjhunwala. That's the problem. So these are basic big ticket investments which anybody can do and everybody should do, but वो करते नहीं है. वो अगर कोफोर्ज में काम करेगा तो वो सोचेगा मैं फर्स्ट सोर्स देख लूं जरा कैसा है. वो अगर कहीं और काम करेगा तो कुछ और देखेगा. So I mean, a dentist will look at cement companies and a cement company will look at probably biotech companies. तो ये problem है. But big ticket investing, because 99% people, Siddharth, in this market come here to beat bank FD and inflation. बट उनको पता नहीं चलता करते करते कि वो कर क्या रहे हैं. उनका टारगेट होता है बैंक एफडी बीट करना, तभी वो मार्केट में आए हैं. बट वंस यू एंटर द मार्केट, देन यू वांट टू डबल इट अप इन 6 months. It doesn't happen, and that's why we lose money. And just one final point, I would say, what has really changed in the social thing last 25 years. So when I started investing 30 years back in college, in Calcutta, I don't know how the thing was in Bombay and other parts of Gujarat. So if you told anybody कि मैं stock market में हूँ, करता हूँ थोड़ा बहुत, they would look at you with contempt. तू शेयर बाजार करता है. But things have changed now because people can discuss stock markets in parties with elders, with youngsters, with friends, with relatives, with newcomers, with strangers, and nobody frowns and says, "What? You are in the stock market?" But 30 years back, if you were in the stock market, it was a perfect recipe for someone to walk up to your dad and say, "तेरा पैसा संभाल के रखना इससे."
हमारा देश बदल रहा है. Dheeraj, the same point to you, and then Vijay, and then finally Nilesh.
I think there are easy names that are available, like Vasant said, but other than that, passive funds is a better opportunity. If you do not understand the market, just invest into the index fund, ETFs, and that's the best way to do it. If you get a regular income, SIP. If you have a lump sum money, put it into liquid funds and do an STP, that will work for you. These are easy and simple formulas for wealth creation. But as Vasant said, that people do not follow simple, easy, proven formulas. They try to be a superheroes or superwomen, and that's where they end up losing a lot of money.
Vijay.
Yeah, I think this year is going to be a slightly difficult year for equities. I think there was a mention of where we believe Nifty could go. Our house views, we probably would see a slight increase in Nifty by the end of this year, closer to maybe 20,000. So nothing much really at a headline level. But the themes that we believe could be interesting for the year would be, in our view, discretionary consumption. That is one theme that we like as a house. Banks, private banks, as a theme we like. Some internet companies have been values have corrected very sharply, so there could be interesting finds there. And capex related manufacturing, that's another theme that we could find some good up. But this is something which looks topical just now. This obviously needs to keep getting evaluated through the course.
I'm glad you mentioned internet companies, because Vijay Shekhar Sharma just a few days back at Davos told us, I was interviewing him, that they will turn profitable in September. That was the first time that he's spoken about that. Nilesh, as we wind down, this same final question to you also for your perspective.
So my recommendation is that just follow the process, be a long-term investor, be a regular investor, and please, please, please have disciplined asset allocation. And if you can't do this, then there is a product called asset allocator fund. Our asset allocator fund is up about 4 times in 10 years. If you haven't multiplied your wealth like that, then just accept the thing humbly and invest in asset allocation fund. Let the fund manager manage your money.
Can I end this by saying that what you have said, if I describe it in my words, lalach buri bala hai.
लालच बुरी बला है वो तो सिद्धार्थ बात सही है, बट उससे भी बड़ी एक बुरी बला है वो भय है. It is not just the greed, it is also the fear. And ऐसा नहीं है कि हमें डर नहीं लगता, हमें 30 साल मार्केट में निकालने के बाद भी डर लगता है.
और जब ज्यादा ऊंचाई पे होते हैं तब डर थोड़ा.
हाँ, बट हमारा डर ऊंचाई का आता है, नीचाई का नहीं आता.
This conversation, I could take it forward by saying डर के आगे जीत है, but somebody said नहीं जीत नहीं है, उसके आगे और दर्द है. But this is something that we could continue discussing. But the bottom line, you have heard from 4 of the best pros in the Indian markets about investing, and especially if you are a new investor, welcome to the markets, but tread with caution. Mental composure, calmness, knowledge, and faith and patience is perhaps the best way to become the next Warren Buffett or Rakesh Jhunjhunwala. Thank you very much to the entire panel, and you, the viewer, round of applause for them. Abha, it's over to you. Thank you.
Siddharth, and it was great listening to all of you together on this stage at the Market Today Summit. Well, we'll take forward that conversation on retail investors with our guests from the mutual fund industry and the kind of trends that they're observing. Could I please have a warm welcome for my guests in conversation with S. Naren, ED and CIO, ICICI Pru AMC, Prashant Jain, Director and Fund Manager, 3P Investment Managers, Sandeep Sikka, ED and CEO, Nippon Life India Asset Management, and Rajiv Thakkar, CIO and Director, PPFAS Asset Management. Gentlemen, a very warm welcome and look forward to engaging with you on this. Fantastic. I have you captive now for the next 45 minutes, and I look forward to diving in. Naren, let's start off with you. You know, we've spoken time and again, especially at around milestone events in the year, trying to predict or really sort of encapsulate perhaps the way the trend is moving. Once again, we're beginning a new year with uncertainty in the backdrop. We're around the corner from the budget. And at the same time, there's a lot of conviction in the India story. From where you're standing, what is the view looking like?
I think one is that markets are, 2022 was most interesting. I don't think if someone had told us a year back there'll be 2 lakh crores of selling by FIs and markets will hold steady, I don't think I would have believed it. But that happened due to the power of domestic investing. So I think that showed that the domestic investor has become a force and is able to withstand such big selling from FIs. And see, we are not in 2017. In 2017, we used to fear what are the credit event coming, what are the problems in the banking system, NPLs, etc. All those problems are not there at this point of time. Now we are looking only at positive events. So the only debate that keeps happening every day, morning, afternoon, evening, is valuations, valuations, and valuations. How much to worry about high valuations relative to the world, because India is costly, the rest of the world is not costly, the rest of the world has more problems, India has fewer problems, and that's a debate which never ends. And every day we wake up thinking about it, and we don't seem to have the answers actually. So what solution we have is, we keep saying SIPs, because that's the only way in which we can try to reduce the risk. We keep saying asset allocation, because that's the second way to reduce the risk. The third way is to talk of debt. And these are the three ways in which we can find a way to reduce the risk of higher valuations at this point of time. But everything we are doing with a positive attitude, not with a negative attitude which we used to have in 2017-18. And I think 2022 was handled brilliantly, and it was actually because of the way 2020 was handled that 2022 was handled brilliantly. So in 2020, most of the other central bankers and government actually overprinted money and did too much of fiscal without looking at what are the long-term implications. So the final impact was, in 2022, you had higher fiscal deficit, higher inflation in US than in India, which I have never seen in my life. So that's why we are in much better shape. But the reality is valuations are higher, and what is the negative that we are going to see due to that? Frankly, we also don't know. So that is why the only solution is SIP, asset allocation, and debt mutual fund investing, and that's what we are trying to do as an industry. Because we don't know the problems of higher valuation, how it will hit, and what problems we will suffer due to that. We ourselves don't know. But otherwise, things are good. The general mood is optimistic. The general mood is very, very good, even in the mutual fund industry, because of the way the SIP movement has happened, and the kind of products that we have at this point of time.
Prashant, let me bring you in here. And, everyone always has looked to you as a consistent, for someone who delivers consistent returns through the funds that he's, of course, driving. How is the scenario different as we enter 2023? Do you see considerable challenges, or are you also extremely optimistic about the India story sustaining?
I think the growth outlook for India's economy is probably one of the best that I have seen. And I think there are two clear takeaways post-COVID. One, the outsourcing of services will become very broad-based, because as remote working has become acceptable, and as the Western world is aging and India continues to add to a young workforce, I think it will throw up a lot more opportunities to create white-collar jobs through offshoring in a very diverse range of areas. And I think that is good for medium to long-term economic growth. The second, I think, in India is clearly now competitive in manufacturing wages across Asia. So 10 years back, we were 2x of Vietnam. Today, we are at par with Vietnam. 10 years back, we were 30% higher than China. Today, we are we were 30% lower than China. Today, we are half of China's wages. Apart from that, I think China plus one and geopolitical need to de-risk beyond China, I think, will bring in greater investments into India by way of FDI. So I think the medium to long-term economic growth outlook of India is, to my mind, extremely positive. Coming to markets, I think two things I would like to say. The most sectors, the profitability has returned completely to normal. So I think we are here for profit growth in line with nominal GDP growth. And finally, coming to valuations, I think most sectors are trading around 15-year or higher than 15-year averages. And that is where, except the utilities sector, which is still below longer term averages. So I would say this is a market where one expectation should be moderated to around nominal GDP growth rate kind of returns over 3-5 year periods. I think the key decider for the current year, I mean, I'm not a believer of forecasting markets, but still, I think Indian bank deposit rates have gone up sharply, and that could moderate the pace of flows towards equities. Most of the investors are positioned in the growth stocks, and I think that will probably disappoint. And last 1 year, 18-month returns have also been quite lackluster. So all of this might lead to moderation in domestic flows. If around this time we get second round of foreigner selling, first round we absorbed extremely well because local flows were extremely healthy. But now valuations are higher and flows could moderate. That could lead to some correction. So I would say I am optimistic on the markets 3-5 years, but ideally one should invest slightly lower or maybe phase out investments as Naren hinted to through SIPs. And so, but there is clearly a need to moderate expectations, and I think the pockets of excesses that have seen meaningful correction, it's my personal opinion that there is still more pain to come in those pockets, and what excesses have been created over 5-10 years, I don't think they will go away in such a early. So, and one last thing, I think China is opening up. While it is structurally probably out of favor because of the challenges there, but it's a large market, and rest of Asian markets, EMs are offering deeper value. So tactically, if some money moves out out of India into those markets, it could lead to some correction. And finally, as we go maybe 6 months ahead, as markets start focusing on fiscal 25, calendar 24, I think the risk reward will steadily turn more favorable. So I don't think this is a market where one should be bearish, and but because slight correction you will see value emerging, and as time goes by, I think one should start turning more optimistic.
All right, lots of interesting points coming in there, and clearly some amount of caution, as we've heard so far from both Naren and Prashant, at least in the early part of the year. Rajiv, let me come to you, and I know we're going to talk more about it later, but you know everyone's right now looking to what's happening in the West, and with the tech winter and the kind of sell-off we're seeing on Wall Street. So talking about valuations, the topple down effect is happening already. How much of that is going to hit us back home here in India?
So if we look at the Western world, we have seen positive rates coming in after a long time. So just about 12 months back, you had trillions of dollars worth of sovereign bonds trading at negative yields, which was never heard of in the past. Now, we are at a scenario where rates are probably 4%, 5% kind of thing in developed worlds for the short-term bonds. So really, money which had no business to be in equities is now going back to fixed income securities. Also, so much of easy money really led to this frothy environment where you had especially in the private space, where businesses with no prospects of earnings got funded, and people were really spinning stories around that. So the sell-off has been brutal. I think the traditional companies which have genuine business models and which are throwing out free cash flow, they'll bounce back and probably go back to their all-time highs. But the companies with very shaky fundamentals will probably have to go into liquidation because additional funding rounds will not come in. So we are seeing a scenario where new funding rounds are happening at lower valuations than the previous funding rounds. We have seen in the public market space also, where after listing we have seen sell-offs both in the Western world and in India as well. So it will be difficult times for those kind of companies.
Okay. You spoke about it, I mean, on the panel earlier, we had some comments coming in about how we'd seen a large cleanup, when it came to the banking space, and we have seen that things are better than before. But is there any risk when we enter a potentially recessionary scenario of once again seeing any kind of, fallback when it comes to companies that have difficulties with their debt?
No, I don't think, not in the near term, because if at all the companies which could be financially in trouble, it could be some of the startups. And those startups are not debt funded, they are VC funded. So it is the VC's responsibility to find a way to fund them more, or what are they going to do, they have to decide. Some of them will go belly up, but the loss will be for the VCs. And I don't think they're all debt funded. So I don't think the problem is for the Indian financial system, and most of those VCs have made multiples of $1 billion in some of the other startups, and some of them have sold it to mutual funds also at good profits in some of their other investments. So they are also not at risk. So I don't think there is any challenge at this point of time. But 1 year back, luckily I would say that the first few new age companies which got listed caused losses to the investors. Otherwise, we would have headed for disaster, because what people were trying to do is sell companies with no income, no profits, no sign of profits to Indian investors at absurd prices. And luckily, the first few investments led to big losses, so they have to now show profits to people like us to get investments. Otherwise, we would have been in big disaster. Luckily, now we are going to tell the companies, boss, please show profits, please show some path to profitability, path to cash flows, otherwise we will not be in a position to invest. Luckily, I would say. Why? Because if 50 companies had got listed and then all the 50 had fallen, it could have been a nightmare, because most of the time people are asking people like me and Prashant, you're not looked at these new age companies, but luckily their first few failed, I would say. So I think the risk is not to the financial system, and the people who will lose money in it, they can afford to lose money. Because as you would have seen, each month there is one company which says, I have falsified accounts. But the losses are not to the Indian financial system.
Okay. What about, I was speaking to the CFO at Adani Enterprises because of the upcoming FPO, and he had a complaint. He said that, Mr. Singh said that enough mutual funds haven't picked up, our issues and haven't really participated. How would you respond to that? We've got a 20,000 crore FPO coming up there, one of the largest groups, incredibly leveraged, although very confident of their debt ratio currently. Prashant? Yeah.
So I have no money to manage right now. No, I think some of those businesses are good, and the management quality, the operationally these are very sound businesses. Whether you look at the airports business, the ports business, the power business, these are extremely sound businesses with solid entry barriers. I think the issue is basically around the valuations, and when you look at the current valuations, unless you think too much into the future, I think it is, at least to my mind, I think the valuations are on the higher side.
All right, fair enough. Sandeep, let me come to you. Clearly profitability is the buzzword, and given the current environment, higher inflation, cost pressures, so on and so forth, we're entering earnings season now, of course. And while largely companies are expected to report earnings on track, do you feel that there may be pressures going forward, even on some of the most well-performing giants as of now?
I think overall, as Prashant and Naren mentioned, overall the outlook on India remains positive. I think what happens in 1 quarter or 2 quarters does not matter. But again, I think the most important thing from our perspective has been, because the mutual fund industry, majority of the investors have started looking things from a very long-term perspective. Rather, I think when you started, the starting 2023, I think one of the key highlights of starting this year has been a data point which a lot of us have missed out, while we see the SIPs which are there coming right now, the monthly SIP is coming to about 13,000 crores. It's actually crossed 13,000, shadowless of 14,000. If you were to look at the other way around, we are a country of 140 crore population. First time we have come to a stage we are getting 100 rupee per SIP per month from every Indian. Now, and this is happening with the population of only 3% of the population investing in mutual funds. Now, let's see it the other way around. If this 100 rupee goes to 200 rupees, we are talking of going to almost 30,000 crores. And if this 3% population goes to 6%, we are talking of going to 50,000 crores per month. And I think that's the stage where we are right now. So I think from our perspective, I think the quarterly earnings are very critical, but I think we need to monitor closely. But the good thing has been, as far as the investors are concerned, they have matured a lot. They are coming from long-term point of view. And I think, and we clearly see the short-term volatility that can come in corporate earnings will not distract the mutual fund industry from investing in good companies.
All right. So talking about the companies of choice then, I'd love to get the themes or strategies with which you're approaching investing in 2023, where you find value at a time like this, and especially for those who are always wondering, which fund to go for. Is there a particular, strategy to keep in mind, whether it be, a larger portion of the heavyweights or certain sectoral themes that are perhaps safer at a time like this? I'd love to get all of you to sort of comment on that. Let me start with you, Rajiv. Okay, Naren.
So, we came to a conclusion that given that this will be a year where the Fed will stop hiking rates, almost all the asset classes become reasonably interesting. So that's why something like a multi-asset strategy, whether it's gold, silver, plus equity, plus debt, plus REIT, InvIT, everything should become more interesting. Because no individual asset class also is at this point of time outside debt very, very attractive at this point of time, because equities are not cheap. And this is a year where there will be a lot of volatility, because a year where Fed is going to finally stop hiking. They're going to stop hiking because either the economy slows down or because inflation comes down substantially. And when inflation comes down, it's normally due to economy slowing down. And so that's why we felt that's the kind of situation. So we believe this is a year where it's difficult to make money outside debt, but you invest in other asset classes also through the multi-asset route, so that you make money subsequently in the other years with the other asset classes. That's how we've been thinking about it. Clearly, we are more in favor of large caps or flexi caps, primarily because in small and mid caps, we have not seen any redemptions for years at this point of time, and therefore many of the stocks in small and mid caps trade at 50, 60, 70 PE. Whereas thanks to the 2 lakh crores of redemptions which happened in FIS, most of the large caps actually corrected in the year 2022, whereas many of the small caps and mid caps, some of them have just not corrected, and they continue to trade at 50, 60, 70 PE. There are a lot of cheap small and mid caps, but they are not held by the funds. It's only the costlier stocks which are by and large held by the funds, and where there has been hardly any redemptions. So that's why we are much more in favor of large caps and flexi caps. So that's how we look at it.
Okay. Prashant?
See, while we, of course, will debate and should debate 1 year outlook, but I think we should not lose sight of the nature of this asset class. And it pays to think long term and to hold equities for long periods. I mean, 100 Sensex has come to 58,000. And so, see, we are always focused on 1 year plus 10%, minus 10%. But I think India offers you a significant compounding story. So we should not lose sight of that. And valuations are not so expensive in India, while they are slightly expensive, that it will not create meaningful wealth over medium to long periods. I think coming to where could one invest, I feel the profit growth is clearly normalizing. See, at bottom, India's profit growth profits to GDP had fallen to almost 1% for 3 years back to back. We have recovered very fast to 4 to 5% range. So I think profit growth is very broad-based, unlike 3 years back, and it is normalized. I think in this kind of an environment where profits are broad-based, the high P's where growth is not supportive of those multiples, I think those excesses will go. And so I would avoid stocks where multiples are very high, even though they have corrected 20, 30, 40%. I would also focus more on large caps, because in the small mid cap space, I mean, while Naren said there are few stocks or many stocks which are not owned by mutual funds are cheap, but I don't think they would be any meaningful part of the market. So I think it would make greater sense to invest in small companies in deeper market corrections. I think the only space where I am also sectorally slightly cautious is the consumer space. That sector has benefited immensely from lack of profit growth elsewhere. It has benefited from corporate tax rate cuts, from GST cuts. It has also benefited from lower commodity prices. But now I think all these tailwinds are missing and the multiples continue to remain quite high for a reasonably mature sector. So I would be slightly cautious there. I think banking appears to be in a sweet spot. The credit growth is good, NPAs are extremely low, provisioning costs are low, and valuations are in line with longer term averages. So that is one space I think I would continue to be positive on.
That's super interesting. And everyone has been, of course, talking about banking being the predominant theme going forward. I also like what you talked about when it comes to consumer, because I've been trying to question where this robust demand is going to come from when we're heading in for a inflationary environment. What's your take, Rajiv?
So, Prashant and Naren have covered a lot of aspects, and largely the view is similar in those spaces. I think when we talk about index levels or valuation levels, if we say 18,000 Nifty and down the road we see 1,000 EPS, that average hides a lot of things. So to build on what Prashantji said, I have seen consumption-oriented names in 2003 trading at early teen multiples, those going to triple-digit multiples these days. That is one segment. The other segment is the loss-making or the new age companies. So those are things which even with a 20%, 30% fall don't become attractive by any stretch of imagination. One segment which I think is largely ignored, so banking of course we also have more or less the same view. One segment which has been largely ignored and which has been underperforming for maybe 2 decades now has been the PSU space. And I think this time round the privatization intent seems to be real. For a long time, Air India privatization was spoken about. That has actually happened. There is a clear path that barring a few strategic sectors, they will try and exit all the other holdings. If they actually deliver on that, that is a space where the asset valuations are very attractive. In some cases, they are monopoly businesses or oligopolistic kind of businesses. And with some management change, you could see significant appreciation in stock prices. We have seen turnarounds in a handful of companies. So you had the Balcos and Hindustan Zincs and those kind of companies being privatized in almost 2 decades back. I think we are headed towards a similar thing. So that is one space I would watch for.
I know you said not to talk in averages, but everyone's spoken about how high valuations are affecting things across the board. Sandeep, what is a fair valuation, let's say, for the index? I mean, if we're talking about a tapering the kind of multiple that you're looking at that you feel would be fair. And when it comes to the new age companies, I mean, I just want to take the example of, let's say, a Nykaa, for instance. I mean, we're starting to see it trade at lower levels to, what it's seen after the initial euphoria post-listing. And Samir earlier today was talking about it, how it would still not be on his shopping list, even at lower prices. Would it be on yours?
I think Naren mentioned, I think a lot of asset management companies, the traditional ones, have been blamed that I think we don't understand this sector. I think from our perspective, it's not a question of understanding, it's just a question of valuations. And difficult to talk about an individual stock, but I think still we believe, I think we don't understand this sector, so we'll prefer staying away. I think number two, a lot of discussion for the last 20 minutes happened about equity, and I felt debt was a little underrepresented. So when you're talking about the theme for next year, fixed income seems to be attractive. I think we clearly see two things which have happened in the last 3-4 years. And many times it's not about the question that you asked what we feel is right, but it's a question of how the investor will react to it. So last 2-3 years, investors have pulled out of fixed income and have made a lot of money in equity, especially in small cap. And the returns have been in excess of 20% for last 5 years. So I think from our point of view, the way we see, it's important for investors to understand that the past will not be repeated. And so the next few years, we believe fixed income is going to be very attractive, and small cap may or may not be able to give the kind of return that it has given for the last few years. We also believe as a fund house, for us at this point of time, mid cap and large cap is the theme for the next 3 to 4 years.
Okay, so that's pretty clear. I think large caps and of course value plays, banking, some of the key themes to really come out of this conversation so far. We are around the corner from budget, so I have to ask you if you think it's going to really have... He's already shaking his head. But any expectations, even if it's sectorally, sentiment-wise? It's also, of course, the year before major elections. So do you see markets being fairly robust, immune? Is it really only the global factors we're watching out for? Or are you eyeing some of these other factors as well? Nareen?
As I mentioned initially, we used to 90s where budget had a lot of scope to reduce taxes, customs duty, excise duty, income tax. Government has no such scope. I don't think there is the excise duty, GST Act has been passed. Everything will happen in the GST Council. So unnecessarily, everyone wants the budget to be such an equally big event. It can't be. There'll be only few things that can change in the budget. So I don't think it is possible for us to have some extremely path-breaking changes in the budget at this point of time. So that's what we have to realize. It is not possible. Government hands are also tied. You are sitting at 6.2% fiscal deficit. Where is the scope to increase fiscal deficit and give a lot of handouts to people at this point of time? You have to keep fiscal deficit under control. So I think, unfortunately, the government does not have that kind of leeway at this point of time, even in 1.5 years before the election. So I think we should reduce our expectation and realize that there isn't much that the budget can change drastically at this point of time. What the government has brilliantly done, which you have to recognize, is they have improved the computerization of the income tax department, computerization of GST, and that has resulted in huge collection of taxes over the last few years. And you would have seen the tax buoyancy at the direct tax level at this point of time, or even the tax buoyancy at the GST level, without increasing in rates in the GST side particularly. And I think that is primarily because of superb computerization that has happened and the kind of tax returns that have started on the computerization side. So I think that is what has resulted in superb revenue increase, and that's where the government needs to be complimented on. But there isn't much that the budget can do. And that's why our expectations from the budget are minimal, and that's how it has to be. If nothing comes negative in the budget, we are happy. Nothing positive we are anyway expecting from the budget.
Okay, expecting neutrality. Prashant?
No, to be honest, I would 100% agree with what Naren said. I honestly don't have much to add to that.
So budget has become more of a non-event, one would say, in the last couple of years. From a market standpoint, no major expectations this time around. Rajiv?
I am fearful of a thing for which trial balloons have been floated. There is talk about uniform capital gains tax across asset classes. If that were to happen, I would think equity holding period would go to 3 years with other asset classes, which may sentimentally in the short run be a negative, doesn't affect longer term prospects. And tax rates could go to 20% with indexation instead of 10%. So if that doesn't come, that will be a relief. Otherwise, that is a possibility given all the media stories that we are reading.
And given that equity markets have been on such a roll the last couple of years.
No, I think I agree with Naren and Prashant. Over the years, budget has become a non-event. The announcements keep coming out throughout the year, so it's no more on that one particular day. But I would, as per the capital gain things which keeps coming up again and again, I think I have a little different view. I feel whether I think it's just about having a clarity. This sword should not be hanging whether it's going to be increased from 1 year to 2 years to 3 years. But even if it is increased, whether from 1 to 2 or 3 and it's stable for many years, I think it will not make any impact. It's a very, very short-term sentimental thing because any investor who's investing, I think from a long-term point of view, I think is anyway investing from a long-term. And anyone who's trading is anyway paying short-term tax. So it does not matter.
So if we were to look back, let's say for the last 1 year, and if I had to just put you on the spot, what would you say is the one bet or the one thing that you got right in the year that's gone by, and the one thing that you wish you caught in the year that's gone by?
Not say 1 year. I think a few years back, whether it was PSU, whether it was value investing, it was, let's say, quality at any price investing, which we didn't believe in. And people used to say, it'll never come back. You're not a believer at quality at any price investing. Buy 80 PE stocks, buy 100 PE stocks. Don't look at price. Just buy the best stocks in the country. And people used to ask us, you're obsolete because you don't buy these stocks. But now if you look in January 2023, that strategy of buying quality at any price has been completely destroyed. Now all the people who did that, people are asking themselves, what did they do? And now I don't know what they are going to do, actually. Because they're still sitting on extremely overvalued stocks. The companies are good. Companies were always good. They're sitting on extremely overvalued stocks. So I think essentially that is what, and people used to ask us, why do you buy PSUs? So even Rajiv today talked about PSUs as a theme, and it was rare to find people who felt that PSU could be an investing universe. So I think those were the thrills for us in the last 2 to 3 years at this point of time. So I would say it was more, and the thrill of seeing that mutual funds, that SIP fought FIIs and won, was something I think the entire mutual fund sales community needs to be complimented. Because I would have never imagined SIP can beat FII. And I think that the sales community needs to be complimented.
I completely agree. That was definitely phenomenal when we saw those numbers come in. Prashant, what about you?
I think my portfolio positioning last few years was quite similar to what Naren mentioned, and I think it has played out quite well, and I would specifically like to highlight two things, maybe one or two. One, ESG as a theme had gained a lot of ground. It was never based on rational logic or fundamentals, but you can see how the majority opinion can go in the wrong direction. And I think the way ESG has been discredited or it has underperformed, I think once again highlights that in the long term markets are quite rational, but they may of course test your patience, endurance in the short to medium term. And I think I must also highlight, the defense stocks, of course they are PSUs, they were extremely cheap, they are up 4x. So I have seen time and again that focus on reasonable quality and what you are paying is extremely important, and all long-term investors should never lose sight of what you are paying and what you are getting. And if you keep that in mind, I think outcome is good. But in this market, to be honest, I don't see any futuristic themes that are deeply undervalued. I think these are reasonable markets and these are more compounding markets and then otherwise, yes.
Wise advice coming in there from Prashant.
Yeah, so last 2-3 years, there's no specific learning, but there are areas where one gets a lot of pushback from investors, and for which I don't have a very clear answer or I don't have a solution. So people either accuse us of selling too early or selling too late or holding on too late. So they expect us to identify the precise peak when stock prices are going to correct. So they accuse us of selling our consumption-oriented names or FMCG names too early. And they accuse us of holding on to big tech names which have done well over the last 7-8 years that we have been holding. But they said, couldn't you have sold it 6 months back or 12 months back? So that is part and parcel of the investing journey, I guess.
Well, thank you for being so honest, Rajiv. Like, totally feel your pain there.
I think from our perspective, the key, if what went right, I should say, I think we didn't get carried away with a lot of these new IPOs which came, because I think there's always a pressure. Many times, just continuing with what Rajiv said, it's difficult to justify to people why you did not invest, because they call you old-fashioned. And it was difficult that time when it was going, and especially when the stocks were above the IPO price, it was even more difficult, to justify. But having said that, I think we also believe that I think ultimately quality and valuation both have to be good. They have to be there. I think you cannot be paying excess valuation even if the business is good. And the other thing good that I think if I was to look back at the last 4 or 5 years that we've been able to do, not related to just investing in a stock, but investing in a business line, has been to invest in the ETF business. I think the fact is today, more investors are coming into ETF in the last 1 year than active mutual funds. That's again a theme which we need to be watchful of. And personally, we see that, especially in the large cap, the ETFs will get a very high wallet share.
So, the big bull always used to say this is going to be India's decade. And he said it's only the beginning of the biggest bull market ever. So I'll just close with that. Prashant, do you feel that we are just at the beginning while things may be normalizing, so to say, in terms of returns, but is the India story only just starting?
See, India is the 5th largest economy, so you can't say you are at the starting point. I think we have come a long way, but I do feel that the next 2 decades, the current and the next decade, the growth rate should be higher in real terms than the previous 2 to 4 decades. I think stock markets are fairly valued. So, and India has structurally moved to low inflation. Till 2000, our inflation used to be 8, 10, 12%. Last 2 decades, it's around 5, 6%. I don't think we can lose sight of that, because that has an important bearing on total returns and investor expectations. So I think unless the real growth moves up to 7, 8%, till the time nominal GDP should continue to grow around 11, 12%. I think those would be realistic expectations, but we should not ignore a 12% CAGR over a long period of time, especially if it is 5, 6%, 7% higher than inflation. So I would say these are markets for the patient, for the disciplined investor.
Fantastic, gentlemen. Thank you so much for your time today and for your frank and very real insights. A big round of applause, please. Thank you so much. All right, well, you'll have a chance to network over tea as we break for a few moments. Look forward to having you back here, in a few minutes to continue some of these fantastic conversations. We'll have a power pack lined up right after this break.
Hello, ladies and gentlemen. It's nice to be here sitting in front of a markets audience after many, many years in Mumbai. I don't know when was the last time I did something like this, and I almost seem to forget that I did this for a living for so many years. In fact, this morning I was